It's the midweek. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwawu. Coming up, Saudi Arabia and Iraq battle Nigeria to gain more market share from India, the world's third largest crude oil importer. Oil giant Shell sued in London for the second time in 5 years over spills in Nigeria's Niger Delta. U.S. ratings agency Moody's cuts its outlook for China from stable to negative. We'll begin with crude oil markets. Saudi Arabia and Iraq are battling Nigeria to gain more market share from India, the world's third largest crude oil importer. According to data from the Nigerian National Petroleum Corporation, India was the highest buyer of Nigerian crude with over 127 million barrels between January and October 2015. Now, Nigeria was the third largest supplier of crude oil to India in January, with about 500,000 barrels per day behind Saudi Arabia's 940,000 barrels per day and Iraq's 930,000 barrels per day. As of January 2016, data shows Saudi Arabia supplying 22%, Iraq 21.6%, Nigeria 11.7%, United Arab Emirates 9.1%, Venezuela 8.7%, Iran 6.3%, and Kuwait 4.8%. An oil giant Shell is being sued in London for the second time in 5 years over spills in Nigeria's Niger Delta. Two communities are claiming compensation and want Shell to clean up their land. Shell said it is at an early stage in reviewing the claims and that the case should be heard in Nigeria. The Ogale community of about 40,000 people in Rivers State on the coast of Nigeria, who are mainly farmers or fishermen, are some of the claimants. Their case is being handled by law firm Lay Day. Their claim says spills since 1989 have meant they don't have clean drinking water, farmland or river. The first court hearing is due today at the Technology and Construction Court, which will determine if the claimants can lodge a case against Shell's Nigerian business known as Shell Petroleum Development Company of Nigeria. The U.S. ratings agency Moody's has cut its outlook for China from stable to negative. While reaffirming its current debt rating, the agency warned that reforms were needed to avoid a downgrade. Moody's said the change in outlook was based on expectations that Beijing's fiscal strength would continue to decline. The negative outlook comes on the heels of fresh data suggesting China's economy is continuing to lose steam. Moody's said it was concerned over China's incomplete implementation of much-needed reforms. But the ratings agency did confirm China's current AA3 rating, saying that there was still time to address the current economic imbalances and implement reforms. And at the Asian market, Japanese shares rose today on the strong lead from Wall Street, and other Asian markets also saw strong gains. Tokyo's Nikkei 225 jumped to finish the day 4.1% up at 16,746.55 points, the highest point for the index in just over 3 weeks. Investor sentiment remained unfazed by U.S. ratings agency Moody's decision to cut its outlook for China from stable to negative. China's mainland benchmark Shanghai Composite followed the upbeat regional trend and finished the trading day up 4.26%. In Hong Kong, the Hang Seng Index closed the session up 3.07%, extending the global rally as investor sentiment brightened on the improved U.S. economic data. South Korea's benchmark Kospi Index finished up 1.6% at 1,947.42 points. Now let's see how the European markets are faring today. Let's talk to Conrad Bussen, DWTV Channels TV correspondent standing by at the Frankfurt Stock Exchange. Good afternoon, Conrad. Happy to see you again. Now, on the stock markets, it feels like investor sentiment has made a U-turn with the beginning of this month of March. Conrad, why the sudden mood swing towards optimism? After all, none of the problems of the past weeks have really changed.
That's absolutely true, Chimi, and that's also the reason why most traders here are a bit hesitant to believe that the U-turn that has happened on the stock market since yesterday has really a lot of momentum. Most traders warn that the potential for this stock market to quickly turn downwards again is still relatively high. On the other hand, there are a few reasons for investors to be optimistic for stocks. One is the decision by the People's Bank of China, the reserve bank there, to lower the reserve ratios that commercial banks in China have to hold. This is a measure meant to enhance lending in China. And you know, you just mentioned and reported to our viewers that the Moody's rating agency is hesitant in regard to China. It says that it's cutting its outlook for China's financial stability from stable to negative because it does not really believe that the authorities in China will be able to really stabilize the Chinese economy. Traders I talk to here say that at least this potential downgrade of China by Moody's is a high point of motivation for the authorities in Beijing to do what they can in order to, prevent the Chinese economy from a hard landing. And all this gives reason, at least for the moment, to be optimistic for stocks.
Now, what about U.S. manufacturing data? A survey among purchasing managers still indicates a contraction of this sector.
Yes, that's true. The Purchasing Managers Index by the Institute for Supply Management in the United States is still below 50, and that indicates contraction. But we have to also note that within negative territory, this Purchasing Managers Index has climbed slightly upwards. Now, that might look a bit like nitpicking, but it clearly is an indicator that the manufacturing sector is on the way of recovery. And that's positive for the US economy and for the market there. What's more, we've been getting reports about strong car sales in the US, not by Volkswagen. They don't have good sales numbers in the US at the moment, but other car makers do, also the German ones. And of course, this is also a piece of good news about the American economy, because
Oh, we sincerely apologize. We seem to have lost Conrad. Hello, Hello, Conrad.
United States lately indicate that investors do not have to be afraid of upcoming interest rate rises in the US. And all this combined means that America, too, is a strong support factor for the stock markets at the moment.
Well, Conrad, I think I lost you a bit there, but let's look at the presidential election in the US. Has Super Tuesday had some impact on trading already?
Oh, it has, in terms of, causing the #1 discussion topic among financial people too. Traders also here in Frankfurt are intensively discussing what they could expect eventually from an American President, Hillary Clinton or Donald Trump. In terms of real investment decisions, traders also say it's a bit too early to really decide what the financial outcome from an investor's point of view would be in November. Too many weird things can still happen until this November election date to really seriously decide in terms of investments. But it's basically something that people on the financial markets are discussing, and it's adding to some uncertainty on the markets. And volatility has been the most important driver, dominating driver on the markets for so long time. It's going to be staying with us.
Right. Thank you for your time, Conrad. Enjoy the rest of the day. Conrad Bussen, DWTV Channels TV correspondent, reporting from the Frankfurt Stock Exchange. Now, how is gold trading on the New York Mercantile Exchange? Find out after the break. Do stay with us.